Hello and welcome to this week's ITPM Flash. My name's Shek. I hope you're all well. Now today's Flash is entitled Unfashionable Re-Ratings, and of course we're not talking about socks and sandals, we're talking about potentially finding value stocks that might have a chance of a genuine re-rating. Now every so often, especially when tech is at high valuations relative to its historic past, there'll be fundamental research saying tech hasn't been this expensive since medieval ages or what have you. And of course, it's correct. And then of course, you might see a bit of rotation. The market might attempt to broaden out and you see some top slicing of tech and a bit of value chasing. And then what's typically happened is after a few months or so, these value stocks, which look relatively cheap, their fundamentals haven't really improved. There are no ratings, earnings upgrades or anything like that. And then, of course, tech continues to put in better numbers and we go back on our merry way. But of course, as well documented, the market is broadening out. And I think there are some really interesting re-rating stories out there. But of course, we've got to identify something that has a genuine fundamental improvement coming. So the first stock I'm going to look at is HPQ. So this is hardware, storage and peripherals. It's 60% from an earnings perspective printing and 38% commercial and personal computer systems. And of course, it hasn't participated in this tech rally, nor should it. And the last earnings were pretty much in line. Stocks on a P of 9, right? It's been unloved and unfashionable for a while. There hasn't been really a good range of product upcycle or really a need for commercial systems upgrades. And when you actually look at the data for personal computers, PC shipments in the US only grew 3% last year, and commercial actually declined 2% in the States. And global shipments of PC workstations shrank nearly 9%. And we are now expecting a bit of an improvement. So for 2024 and 5, personal computer markets expected to grow between 7 and 10%. This is obviously with AI-capable PCs and a transition to Windows 11. Now, I think this is far too low. And HPQ has about 28% of the personal computer market, followed by Dell, Apple, and Lenovo. And really, for this trade to work, all you need is increased demand in the PC market. We've got a product super cycle hopefully coming along. And this will obviously feed into commercial as well. And the rise of generative AI may spark this cycle as consumers upgrade their devices for all the AI functionality. And for example, the latest AI laptops will be able to run a lot of AI processes without needing an internet connection. And of course, we're learning more and more about these products as we go through time. Now, when you have a look at this chart, this is what I mean by a value chain. And of course, we understand clearly NVIDIA and Arista Networks had all the action to start with, all the semiconductors and the hardware, the networking, the routers. And then we've seen the AI server manufacturers, the Dells and the HPEs, get a bump to their numbers as demand grows. And as we go through the value chain, this is what I'm suggesting might happen. It's not in the numbers now, the stock's extremely cheap. But as you're about to see, when a value stock gets a re-rating, when the fundamentals really do start to show some improvement after years of underperformance and nothing exciting really going on, the returns can be quite large. And this is just an out-of-the-money vertical at June 32.37. You'll get another set of earnings, but more importantly, you'll get more products coming into the commercial and public domain and hopefully increased demand. And you can see a re-rating, and this would require the PE to go from 8 to 10, would result in a 426% return, give or take. So we're not buying it because it's cheap. This is AI feeding through the value chain, starting off with chips, ending up in manufacturing of personal and commercial computer systems. And that's the result that you could have. And along a similar vein, I'm going to have a look at Best Buy. Now, of course, Best Buy hasn't had a good year since we've been locked down, and obviously then everyone was upgrading their personal electronics, their gaming, if that's your thing, and TVs and all sorts. And ever since the reopening, of course, people have valued experience, going out and having fun, more than personal electronics at home. Certainly Unloved and Fashionable got a PE of 12. Now, of course, their revenues are still 20% lower than the peak. And there are problems with Best Buy. Free cash flow poor, soft top line, debt's quite high. Could they cut their dividend? I guess. And they've seen uneven consumer demand. The sort of companies saying, we're executing through a difficult macro environment. We've seen it for years. That's why the stock's where it hasn't moved for years. And then, of course, popping back to this chart, we're just seeing the next potential evolution as AI sweeps through the whole value chain of the economy. And of course, if there is big demand for laptops and, personal AI wellness and all these apps that are no doubt going to be flooding into our consciousness, certainly in the run up to Christmas, is this going to be a value stock that re-rates? And of course, we can have a look at some extremely attractive trade structures. So a June re-rating requiring the P to go from 12 to 15 would see the stock at 100, and a slightly out of the money vertical will give you a return of over 5.5 times. And the great thing about these turnaround stories from a structuring perspective is you can allow yourself more time. There is a valid reason for having more time. And you could even go out as far as September, which would typically be the furthest I'd ever go out from, mid-March where we are today. And you'll still get a 3.5 return. And then you'll get a couple of earnings reports. And of course, by that point, the poor old management have got to sound a bit more excited about all these products that are coming through. And of course, with these sort of re-ratings, timing isn't so important with something like Best Buy, but whether you choose when you research these names to put them on or not. With these sort of returns, a half position is certainly valid, or you keep them on your watch list just waiting for a few upgrades to come through, a bit of positive chat from management, and get in very, very early. So, the market is broadening out. I think there are some really good turnaround stories, but make sure you're not just trading off a chart and you're not trading off a really low PE. Well, that's it for today. Thank you very much for listening. My next flash will come to you from Thailand, where we'll be halfway through the ITPM 2024 Thailand program. Looking forward to seeing you then. Thank you.